Swiss luxury group Richemont owns several of the world's leading jewellery, watches and writing instruments brands, including Cartier, Van Cleef Arpels, IWC, Panerai and Montblanc. It is controlled by the Rupert family and has made great progress in sales in China. It has a market cap of 258 billion rand. And of course, all those invested in Richemont smiling ever so broadly after their recent set of results when the stock shot up 7.5% in one day. Can we go higher on Richemont? And of course, looking now at their diamond play. That's what we're really talking about here, which is why we mentioned all the jewelry.
Yeah, look, it's had a big run from the 2008 crisis. It was trading at around 15 Rand. Last week, it traded up to all-time highs around 52 Rand 50 odd. It's since somewhat pulled back to the 49 Rand 50 level, largely on the back of global markets having moved lower. Also, one of their subsidiaries or one of their brands, Swatch, the Swiss watchmaker, they said that their sales had actually slowed to the lowest levels in the past 2.5 years. So that wasn't too good for them. But nonetheless, huge growth around globally. I've got some data here. Middle East and Africa, 16% of sales, 45% in emerging markets, solid double-digit growth in Europe, and they expect solid, robust growth globally still going forward. They feel that the consumer still has enough money to, or their sort of client has enough money to spend on luxury goods, and it's a good indication of, and they foresee in the future that their client base will still have enough money to splurge on luxury items.
In actual fact, this is proving to be very defensive. So your upper LSM, for sake of a better term, are not impacted by the financial turmoil.
It seems so, and interestingly, the luxury goods business was dominated a decade or more ago by American sales. Tiffany's, high net worth hedge funders buying their girlfriends and their wives, huge diamond rings, etc., etc. Then the Europeans were seen as a bit old and fuddy-duddy. Johan Rupert then started aggregating these business interests. Now, Cartier is a very big and profitable business and by far the biggest contributor to Richemont's numbers. The watches are kind of small and high margin, but they get talked about a lot. And then there's the writing instruments and stuff. What Johan Rupert did more than anyone else, though, was go to China early. And what they've recognized is that most of the sales growth in Europe is not in fact Europeans.
Chinese tourists.
Chinese people passing through the big boutique stores in the big cities, plus at duty-free locations around the world. So China really is where it's at, and the massive growth in personal disposable income of Chinese people at the upper end. And this apparently is a bling-obsessed society. There's nothing more that says you've arrived than wearing a Cartier tank watch or some sort of Cartier jewelry item. Bigger the better, so it can be seen by everyone. Wear it on the outside of your suit. So, I mean, that's where the growth is. And so I like it as a sort of China proxy. So there's a lot to like. Although, I think there is obviously a question mark about how well it will fare in good times and bad. And there are people who worry a bit about China. I think that 50 Rand a share price level is justified.
Is justified. And of course, you've got a personal holding and you hold it for your clients. You also are steeped in Richemont, aren't you, sir?
Yeah, we've got some clients in Richemont. Having a look at Richemont generally, its luxury sales are very closely correlated to GDP growth. And their biggest market seems to be the Asian market. So, Asia's still got a very big growth rate in terms of GDP, alas slowing down but slightly. A lot of people are expecting it to somewhere stabilize around here. Is this the part where you ask me hot or not?
Okay. Well, you're jumping the gun. Am I not coming too quickly? Not coming quick enough with hot or not?
One of my good friends, he's actually the brand manager for Cartier, for Vendôme, which is a subsidiary of Richemont. That's our product. So if I say not hot, he might kill me. But nonetheless, never mind.
Thanks for the disclosure. You're being forced into saying hot.
No, but I definitely think hot. I think it's got a forward P of around 5. They've produced the numbers, 51% earnings increase, which was operating profit grew by 51%. So the numbers are coming through. They increased the revenue by 29%. So very good numbers on the bottom line. Even though in tough economic, environment globally, and especially in Europe where they operate quite largely as well. So I think definitely hot. It's had quite a big run, maybe a little bit cautious. If you get a very small pullback, I think maybe it's a good entry point for the long term.
The only drawback with Richemont for South African shareholders is the dividend problem. And what that is, it's a Swiss-based company and the Swiss government grabs basically a third of your dividends. And from Investment 101 that, getting the dividends and reinvesting them, key part of the whole kind of long-term investment equation. And you can't really get the money back unless you go through a very complex process where you can get a certain amount of it back. But notwithstanding all of that, I still think Richemont's got plenty of road great management team, lots of cash, good margins, all of that stuff. So it's a good stock to own.
Hot
For me.
at this 48 Rand level, just to clarify.
More than.
More
Can
than.
go higher.
No,
Gentlemen, thanks very much for your time. Do you have a hot stock pick for us?
well, we both chose Richemont. So
You both
for the
chose
reason we
Richemont.
discussed.
All right. Well, we've got it there. Double thumbs up for Richemont. It's hot.